Hi, this is Martin Rapaport, and I'm here to talk to you about last week and this week's important Hong Kong show. The overall assessment of the show is that it wasn't bad. In light of the meltdown of the stock markets last week, the fact that the show wasn't bad is actually a very good sign. Tens of thousands of buyers did come to Hong Kong, and they did buy diamonds, gems, and jewelry. The normal commercial goods sold, not as good as last year, but I think it exceeded expectations given the negative external economic environment. Big stones, very big stones, the larger sizes were quiet. People were afraid to buy and sell. Initially, there was great fear and concern that the market would collapse along with the stock markets. Because you need to understand that when stock markets crash, wealth crashes. And the purchasing power and the luxury demand simply dissipates. However, what I think we learned from Hong Kong was that not only was the show not bad, but that strong hands retained control over the big diamonds. Big diamonds did not sell cheaply at this show. There was no collapse of prices. So what we're seeing is we're seeing the diamond industry's capacity and capability to withstand negative external economic forces. Now, my view is that the luxury sector is going to be pretty much kaput. The drop in wealth in the stock markets is one thing, may go back up, but the uncertainty about wealth is tremendously present. So the general idea that you can sell all kinds of expensive jewelry and buyers don't care about the price because of some luxury or we're going to follow movie star idols and something, I think that story is pretty much gone. We're seeing the greatest transfer of wealth in the history of man over the past 12 months. The Russians, the Arab markets have absorbed so much wealth. They have so many dollars that they're in the market for diamonds, they're in the market for jewelry, they're in the market for things. But the fact that that wealth has not only moved, but it's been now greater concentrated, there's a greater concentration of wealth, means that demands for big stones will probably be strong. Nothing bad happened at the Hong Kong show for the big stones, but we're starting to see this transformation of wealth creating investment demand for big diamonds. So the question is, will big diamonds be seen as simply a luxury product where the buyer doesn't care about the price or the markup or the resale value? Or are large diamonds a tremendous store of value? It's my bet that dollars to donuts, or I should say dollars to diamonds, large diamonds are going to be seen as a tremendously important store of wealth in these financially uncertain times. And we're going to see a transformation for general luxury demand to a higher concentration of luxury combined with investment demand. The bottom line for diamonds is that we need to integrate both types of demand, luxury demand and investment store of value demand. And when the diamond industry gets its act together and is able to explain to the consumer or the investor or the buyer, be he an Arab or a Russian or an American, that the diamond represents an opportunity to have a safe place to put your money, while at the same time providing you with a tremendously good, powerful, emotional message. When that integration takes place, the diamond industry will reach its potential, and it will be protected from the tremendous uncertainty that we see in the global external economic environment.